What is going on today, guys? So we had another brutal day in the stock market, and it's been that way, it feels like, more or less for 6 or 7 weeks, with all the tariff fears and the prevalent uncertainty in the market. And if you're specifically a quantum investor like me, it hasn't been really a fun 2 months. So I did want to talk about some strategies today to be in a market like this, kind of what I've been doing, share some of my strategic adjustments from the bull market to more of the bear market we've found ourselves in lately. I want to share my thoughts on where I think things are headed with all of this, maybe make some guesses about what some of the outcomes of this are going to be. So we're going to look at quantum stocks today. We're going to look at the heat map, and we're just going to talk about news in general and just kind of have a little group therapy session here. Because if you've been a quantum investor, you've gone through the quantum crash and the Trump crash in the last 2.5 months, 3 months. So it has been brutal to say the least. So we got a lot planned. Let's jump right in. All right, guys, so I have the heat map pulled up here, and we've had a lot of news that has been tough on the market. So we know that Nvidia's H2O chips were, let's take a look. All right, we're gonna start with Nvidia. So once upon a time, Nvidia was the most bulletproof, or one of the most bulletproof stocks in the entire stock market. In the last 6 to 9 months, there has been significant pain if you are an Nvidia stockholder. We had DeepSeek that came out and threatened the AI trade and Nvidia's dominance in the industry. We see here that Nvidia's stock has fallen after Trump essentially blocks China AI chip sales. The Trump administration has effectively barred Nvidia from selling its custom artificial intelligence processors to customers in China. The move will force the AI chip leader to write off up to $5.5 billion in inventory and purchase commitments in its fiscal quarter. So that is a lot of money. That is a big immediate financial impact. And Nvidia was recovering a little bit today. This week it was starting to show some signs of improvement. And it just really had a brutal day today, down 7%. And Nvidia, as far as the market goes, as far as tech goes, is one of those companies that just has so much weight on the greater market. But we can see across the board, Microsoft was down, Google, Meta, Apple, Nvidia, Amazon. There is just a lot of fear and uncertainty that's in this market right now. So we also had Jerome Powell come on and talk about, essentially he said, there's no such thing as a Fed put. We're not listening to any political pressures. We're not listening to basically saying to the Trump administration, we don't care what pressure you put on us. We're going to make decisions based on our dual mandate. And no indication of interest rate cuts or anything like that would help the market. And essentially, if we go over to Yahoo Finance, his face is all over. Stocks resume sell-off as Powell warns on trade war. Tech especially has been hit very hard. Powell warns of challenging scenario for Fed on tariffs. And I listened to this today in my headphones, and he's essentially saying, even in all the cases they modeled out, that this set of tariffs is more aggressive than even in their extreme case. So there are concerns that are mounting that this economic policy could have a detrimental effect on investors, on companies, on the economy in general. So what do we take from this? Well, if we look at our quantum watch list, unfortunately, it is all red with D-Wave QBTS leading the charge, 7% down. QUBT right behind, Rigetti, Amgen, Microsoft, LAES, IonQ. IonQ just had a pretty good Fox Business interview that I covered on the channel yesterday. And it just shows you kind of how tech and tech performance in general is so connected to quantum. And quantum, we kind of have to, let's look back. Let's pretend that the whole quantum trade is encapsulated by Rigetti. Rigetti is one of the most well-known quantum pure plays in the market. And let's just kind of talk through what has been happening in this last, let's go back to January. So we're only going back about 3-4 months. We see that the quantum crash effectively gave Rigetti a 60% haircut, and it never fully recovered. It came back to around the $16 level. It sold off in this high pressure macro situation. And then today, along with every other stock in the stock market, it saw in the lower end of its range. So if we look back at a month, we saw $7 today. We saw $8 and then some bounce at the end. So a little bit of a V-shaped recovery. It's doing okay in post-market, but what does this mean? So if you're investing in quantum, like I am, you just have to kind of acknowledge that you're investing in something before it is fully mature and fully developed. So as an early investor, you are taking on the risk of how long is this going to be before there's commercial viability? What type of dangers are associated with being in a speculative, high risk tech stock like quantum? Well, those in a market like this, you're really seeing that investors are uncertain. And when they're uncertain, then they tend to shy away from risky assets. And I'll just show you this in the chart. So when we're going up and there was the euphoria about quantum and we're climbing this mountain, we can see in the volume, those green candles, that lots of money was moving into quantum. But recently we see the kind of the volume in general for Rigetti has been quite low. So what do we make of that? Well, for one, we're in a risk off environment. So the fact that all of these stocks are really holding their gains, because remember, if we go before the run up here, Rigetti, for example, was trading at $2. So there, if you look at it that way, very, very early ground floor investors are already in a very comfortable situation with quantum. And those who entered the trade in the $8 to $10 range are flat or a little bit down. And those who bought at the top, unfortunately, have not enjoyed their investment performance. Let's just say that. But something like quantum is going to require some patience and understanding that this is a developing technology. So that's why on all my quantum tickers, I'm long. Like I have shares and I'm in it for the long haul, day-to-day volatility. While it sucks to see things go down and down, I see a lot of promise in this technology. So I want to talk a little bit about strategies and how I've personally changed my strategy in this market. So for one, since we have seen this 25% haircut on tech since February, so the last 2 months, and I thought it was interesting because Jerome said today the markets are what did he say? I posted it on my channel. He said let me take a look. I posted it. The market is not orderly. Okay, so the Fed chair's definition of orderly is the VIX above 50 and 25% sell off and constant chaos and fear. I don't agree that there's anything that's been orderly about this market. I think that it's been a fear dominated market and uncertainty dominated market. So, and we see that when we had that record day, that run up, and now we've given half of that back. And if things keep trending, maybe we're going to find another low. Maybe we're looking at a situation where we just had a period of hope, and the hope is being extinguished. Now, speaking specifically about strategies for this market, what I have personally done is I have moved away from any options trading, puts or calls. So imagine if you had, for example, on Wednesday, April 9th, if you had a bunch of open puts because, oh, look, yeah, it's the obvious play is to buy puts. And then suddenly the market increases 10% on all the major indexes in one day, and you see your puts turn to dust. I also have really been paring back on any call options. A call works when the market is headed up, but they tend to lose their value very quickly when the market is constantly under strain and pressure like it is now. So what I'm doing is I'm accumulating shares. And for building long-term wealth and for understanding kind of the nature of markets, we are kind of in a period right now where tech has lost about 25%. So one way to look at it is, okay, if I had X number of new dollars to put into the market today, how would I allocate that in today's market? What companies are trading for the best deals? And what companies do I believe will weather this storm or any other storm? Because remember, all these big US tech companies, they went through COVID, they've gone through financial crisis, they've gone through they've seen many storms. There's a lot of new investors in the market. And for them, it was probably really, really fun if we look back to 2023, and all the market did was just go up, 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 and up, and up. And it's a little bit more challenging when the market is going down and there's volatility and uncertainty. But you can also look at it as a long-term investor, as an opportunity to build positions and build your shares up in companies that you believe in, whether those are quantum or not. Even in the quantum watch list, I want to point out, because I show this on a lot of the episodes that I do here, I have Microsoft because Microsoft has a quantum chip that they're developing. Amazon has their Ocelot chip. Google was the first to lead the charge with Willow. So if you're uncomfortable with the risk of investing in smaller companies like D-Wave or QUBT or Rigetti that haven't really established themselves fully and their commercial value, then you can still invest in quantum even with the bigger names. And even if you're not interested in quantum, or you're more concerned about the wider market itself, I think those are valid concerns. I think the conversation has changed a little bit, and until we see progress, then this chop and sort of this downtrend, it's going to be difficult to see blue skies ahead. Now, to close out this video, I want to talk a little bit more on the positive end. Okay, so what would need to happen for us to see potential reversal? What do we need to see for the line to go like this, up and up, and then find its all-time highs, and for a full market recovery? Well, we need some great trade deals. We need to find some semblance of peace with China. We are antagonizing the shit out of China, and I'm not sure what the long game is there, because we get a lot of stuff from China, and we need to negotiate trade deals with other countries, and I think the government itself really, it would really suck if we created our own economic recession or depression, for that example, to just point out like all possible outcomes, right? So we can't just always look. I'm an optimist, and I want to see the markets go up. I want to see companies do well. I want to see people prosper. I want to see the world prosper. If we just play nice, create some fair deals. I know that is grossly oversimplifying the situation, but I also want to bring it back to just foundational basics that if we can have great trade partners and establish better deals, like some upcoming catalysts that could really move the market would be a deal with Japan, a deal with China, a deal with Canada, any sort of news where tariffs are reduced or removed would be a huge mover of the market, because so much of this financial fear that's in the market right now has all of these priced in, all of the fears and uncertainty priced in. So let's hope for some good news to come out. That is all I've got for you. If I've earned a like, consider leaving one. And I hope you have a great day. I hope we close out tomorrow, Thursday, with a stronger day in the market. Just a reminder, the market's closed on Friday. Have a great day.